Let's bring in our first guest. This is William Rhind, founder and CEO of GraniteShares, to get his perspective on today's price action and other things on his radar as we're now about a full week or so into the new year. Thanks for being here.
You're welcome. Good to be here.
Talk to me about, first and foremost, what you're seeing with these markets. Are you surprised at the show of force for equities so far, going back to last Friday's session, how we've started, the strength for 2026?
I think it's in line with expectations. We ended up the end of 2025 quite strongly. We had those blockbuster GDP number just before the end of the year that I think is now continuing people's expectations. Good numbers about the deficit today. Inflation's in check, interest rates coming down, and companies still posting good numbers.
What does all of this mean for the Fed? January 28th, we will get the first FOMC decision of 2026, one of the last ones for Jerome Powell as chair. And we got a few new voting members as well. Neil Kashkari, a handful of others have not been voting members, maybe a bit more dovish, depending on where you fall. What do you think the Fed takes into consideration for January?
I think there was some perhaps concern that the job numbers came in lighter than expectations towards the end of last year, and that maybe gave the Fed room to lower interest rates. But I think that GDP number perhaps has put that to the side, at least for now. The economy's in good shape. If they want to cut rates, I think they can, but I think they'll remain data dependent and probably keep it on hold for this particular call.
We saw gold and silver take a bit of a breather today, but really the storyline throughout the end part of 2025, roaring to new all-time highs. What's on your radar for the precious and some of the industrial metals, knowing a name like silver has a lot of different purposes?
So commodities came into this year, I think, with a big tailwind behind them. We need more power across the economy for AI, for data centers, for all of the build out that we expect. We need more commodities for the electrification of the economy. So all of that was in place, and then of course we had the news about Venezuela and the geopolitical situation there, which I think has really focused everybody's minds, not just on the price of oil and the oil situation, but on metals and minerals again. And so put a bid on gold, put a bid on the precious metals complex that continues from last year, and I think sets the stage well for the remainder of this year.
Retail investors are very familiar with the name GraniteShares, a powerhouse of ETF issuers. What type of interest are you seeing from retail investors? What are they more naturally gravitating towards in the GraniteShares ETF space?
I think the same story, the bull market rolls on, so a lot of interest in leveraged ETFs on single stocks, particularly your tech stocks, your Nvidias, your Teslas, etc. A lot of interest in yield with concerns about interest rates coming down and your cash and your bank account being worth less today than it was 6 months ago, 12 months ago. The search for yield is very much on. Options-based income ETFs like our Yield Boost range have been really popular with investors. And then the last thing, as we briefly touched on, it's precious metals. It's gold, it's platinum, it's other metals that people are looking for to join this rally as we look forward to 2026.
I would assume the big tech, the AI, the semiconductor play still of high interest for retail investors. Is that a fair read?
100%.
Yeah.
AI is still the most important trade out there for this year and perhaps the next few years. But I think we've got some other things to talk about now in the mix, namely the commodity market, which we haven't talked about for some time.
Yeah, of course. We'll have to have you back. We'll talk much more about the commodity market the next time you join us here on the show. That's William Rhind, founder and CEO of the great one and only GraniteShares. We're such a fan of the product. Thank you for being here. Really good to have you.
Thank you.